Alright, let's talk about Bullseye today. So we have in this crash course we have talked about profit, and we have talked about trade flow, and then we have talked about a couple of other things. But let's see how Bullseye is different, because on the surface it looks like trade flow and profit because it is giving out trade ideas, but there are some crucial differences that we're going to talk about in this video. So to start with, what are some of the differences between profit and other tools? So trade flow is a tool that gives you options ideas based on other participants' activity. So if there is a repeat flow, if there are flow traders that are going into a contract, trade flow is just going to surface that. Profit is it, and there are like trade flow is not a short term or a long term or a day trading tool. It depends on the expiration for the contracts that it is surfacing. So if the contract is longer term, then that play is a longer term play. If the contract is short term, then it's a short term play. Then we go to profit, which is a swing trading tool. So the plays or the trade ideas there are valid for 3, 5, 7, maybe 10 days, not more than that. So it's a short term swing trading tool. So then we come to Bullseye, which is a day trading tool or a very, very short term swing trading tool, where we are saying that the plays are valid for up to 1 or 2 days at max. Some other differences between Bullseye, profit, and trade flow is that Bullseye is the most riskiest tool we have. Okay, so having said that, we are saying that it's a very risky tool, but it also has a very high reward. So I think with most people know that with volatility or with risk comes the reward. So if you want to like gain 100% on every play, but you are also willing to lose 50-70% on some plays, then Bullseye is the tool for you. So I just wanted to set expectations first before we actually go ahead and talk about how to make plays, how to analyze data, how do you actually understand everything that you're seeing. So hopefully the expectations are clear. It's a risky tool. Please know that. Don't blindly go into these plays, because again, you are going to lose 50, 70, 80% on some of these plays, and that's not fine for some people. And so please don't do that. But obviously there is a lot of reward as well. So let's talk about how do you actually extract that reward. So the first thing that we are seeing here are the top recent top signals. We see AI confidence, and then we see the contract details on the bottom, and this is just the daily chart. This actually is, I believe, the hourly chart, not the daily chart. Okay, so on the top we have the top signals based on confidence score. Sometimes you'll see a signal that has expired. Just know that you should just add another couple of weeks into that same contract, and we are still expecting that contract to go up. So before we go further, what is Bullseye trying to predict? So Bullseye is trying to predict that the contract price is going to go up for a signal that it's giving. Trade flow is not predicting that. Trade flow is simply surfacing that there is repeat activity for a contract. Big difference here. Bullseye is actually trying to make a prediction. Trade flow is just surfacing data. Even profit is not making a direct prediction, but Bullseye is making a prediction that the price of this contract is going to go up. And so sometimes you're going to see a contract that's already in the money, and you're going to ask like, why is this contract already in the money? Please know that Bullseye does not care about whether a contract is in the money or out of the money. All it cares about is predicting whether a contract's price or the contract's value is going to go up or down. So that's a big difference between Bullseye and other tools. Okay, so now we have these top signals here. We have the hourly chart. So this gives you some idea, and it just gives you a visual summary of how some of these signals are looking. But these are all the signals now. These are all the signals that the tool posts every day. And we have the market. So let's discuss some of these tools. So what does this market column means? So this means what's the expectation for the overall market right now. And this comes directly from the market net flow tool that we have in the options market dashboard. And so anytime you are seeing a signal, you should definitely make sure that that signal has the same sentiment as the entire market right now. And so today, let's assume we were getting all these calls and we were getting some puts as well, but the market was bullish. So you should not be going into any put today. Maybe the market turns bearish tomorrow, then sure, pick up the puts in here and go into them, because the plays are valid for up to a day or at max 2 days. So then pick up these puts. But unless the market flow until the market flow is not supporting the bullseye plays, you should not go into them. So that filter alone is going to filter out a lot of bad plays that are going to cause you big losses. So please always use that. If we just look at some, let's say, non-zero, non-expired profits, and if you set the direction is equal to the market direction, these are some of the plays that were posted today. Let's look at their gains. So 11%, 21%, 21%, 43%. We had a loser, 54%, 22%, 35%, 13%. So we had 3 losers and we had 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 winners, 3 losers. All because we skipped out the plays that were not in accordance to what the market was suggesting it wants to do. So if the overall market is bullish based on our options, market dashboard, and based on our market net flow, then you should only be looking at buying calls. That's a very, very big filter that you should keep in mind. Other filters we have are like increasing confidence, where a signal keeps coming back every single day with slightly increasing confidence. It's a good one. You can play around with it. Then we have a trade flow match, which just tells you this contract or this signal is also present in trade flow. Then we have high confidence, volume greater than open interest, calls and puts, and then you can finally filter based on your watch list and also create filters as well. So that was a very quick overview of some tips to avoid bad plays. Now let's actually go ahead and talk about some random plays that, again, I have not looked at before. I'll do this with you and we'll see how, once a play comes out and once we have filtered the bad ones down, once we have picked something good, how do we actually go into it. And there is going to be some hindsight bias here, obviously, because we are looking at historical charts. We are looking at the chart for the day when the day is already over. But I'll still, keeping that bias in mind, I'll try to do my best and talk about things that are very easy to use in real time as well. Let's right away, let's use this. And I'm going to pick up the QQQ because I played S&P today and QQQ was very similar. So let's go to the stocks dashboard. Let's search for QQQ, and since these are either day trading plays or these are like 1 or 2 days at max, we want to be looking at a shorter term time frame. Okay, we got that. So this is the 5-minute chart. This is where the day started. And so let's go back actually. Let's see when did that play come in. So it came in about like 30 minutes into the market open. Let's go back. Let's change to 5 minutes. Let's actually pull up a couple of dark pool levels. Okay. And then I'm going to this yellow line is the VWAP. Okay, so now we can talk about how do you actually play this. So around this time, 10:10. So this is where the signal came in. And at this time, our market flow was still very, very bullish. So we were still expecting this play to pan out. But you can see that we immediately broke the VWAP, which is never a good sign. So we went below the VWAP, but we had a $150 million dark pool print right at about 322, and then we also had one at 321. So about 322 seemed like a possible support. So we went down, we had this hammer like candle, and then we started to go up. So this dark pool print is where we found support. Let's still not go in right here because we are still below the VWAP, and a very simple day trading rule is to buy when we are above VWAP, sell when we are below. It's a very simple rule, many limitations, but let's stick with that right now. So once we actually cross this, at this point in time, now we are above the VWAP, and that's a very, I think, basic bullish signal. But that's just one signal. We have other confidence factors. So we know market net flow is bullish. We know the overall market is looking bullish today. We know Bullseye gave a good confidence, let's assume, call signal. So now we have 3 factors going in our favor. Now we can, at this point, once we break the VWAP, we can go in. We do have like 2 dark pool prints here that could have acted as resistance. It tried to, but we broke right above it and we were fine. That was the first entry. it was not a super high confidence entry because we had other dark pool resistances on top, but it was still an entry that we could have made because we had different confidence factors. Then we went to the top again. There was a $300 million dark pool print sitting, and that print actually we found resistance at that print. So you should know to sort of exit here, like take profits when you reach here, because that is a massive print. It's about $300 million sitting on that level, so it might act as a resistance. And once you see like this bad red candle where it is like an inverted hammer, where we tried to go up but immediately got rejected, so take profits here. Then we come down, we find, so previously it was a resistance, but now we are finding support here. I would still not go in here because this is just one level where we have support. We went up, we went down again. Now this was my entry for the day. I played SPY here, and because we fell on this anchored VWAP again, or we fell on this VWAP from the start of the day, we had a dark pool level support, and market net flow was bullish, and Bullseye gave us a play. So those were a couple of factors that were all aligning in the same direction. So I took a call here, and as long as we are not breaking below this level again, I stayed in this call till about here for about 15% profits. Then you can see how strong that dark pool level was today. We kept finding resistance there, and the last entry that you got for the day was, again, we fell on the VWAP, we fell on the dark pool support, and that was our entry. We did not break it, so as long as we are staying above that level, we have our stop loss somewhere around here, right below these levels, and then we went high after that. So that's a very simple play that we made today based on Bullseye, dark pool levels, and market net flow. So one theme that you might be seeing here is that it's not just about looking at a play and then just blindly going in. It's always about looking at a play, doing some additional due diligence, finding a good entry, and then getting good profits out of that. Let's do one more because I played S&P, so I knew how it was. I knew how QQQ would be looking, but let's actually pick a random signal and let's look at that. Okay, let's pick the one that had the best results. So low confidence here, but let's still pick Netflix because we got really good profits here. I have the 5-minute chart open. I am going to. So I have the 5-minute chart open and I have the dark pool levels as well. And so we gapped up today. So let's just start our VWAP from there. And this is the 5-minute chart for the day. We gapped up. We had a dark pool level right at the open today. It was filled at bid because it was a block trade, not really a dark pool, but still let's consider it as a potential level of interest. But as soon as we opened, we immediately went up and then we consolidated for a while. And so the trading flow, the bullseye signal came in and market net flow was bullish. So we were expecting the market to go up at all of these candles. Then at this candle, we actually broke above the VWAP and we showed some volume as well. You can look at the volume here. So this could probably be your entry. I didn't play this, so again, this is all hindsight bias, but I am keeping things simple so that you can follow the same principles when making actual plays. So this is, you're seeing volume on a bullish candle. You know market net flow is bullish. You know Bullseye just gave a call signal. So this seemed like a good candle where you could have entered. Then we make a nice, we go from about 240 all the way to 243. So nice $3 move, and I think that alone would have given you 10-20% profits. Then you can see we did come back to the anchored VWAP, but we didn't even need to touch it. We just went we just bounced from that VWAP again, and we kept going up almost all day. So this was a simpler play because we never really came back to any support. We just kept going up all day, and we showed a lot of strength. If you're not seeing these stocks hit any support, and if they just keep going up, and if they're always above their VWAP, then that just means stay in the play, because the market net flow was bullish all day. So we were expecting all dips to be bought, and that's what happened. So that was a second example. I kept things very simple, and that's obviously by design. I don't want to talk about different technical indicators because everyone has their own way of doing technical analysis. Some people use support and resistance lines, some people use gamma exposure, gamma levels, some people use dark pool levels, some people use RSI, MACD. There are so many things, trend lines that you can use. Use any of them, but take confluence from the market net flow, from Bullseye, and from overall sort of price action, and then go into. If you can do that, then you can see here that these plays work out quite well. um, Having said all of that, I'd still highly recommend be aware of the expectation, or be aware of the risk of the tool. It's a very risky tool. Sometimes you do lose money, so just have good risk management. Just be responsible when you're using this tool. As long as you're doing that, it is a good tool. You can see the signals that we got today. 9 out of 12 signals worked out pretty well. That obviously shows that something is working here, and we keep trying to improve this tool. So again, just be responsible, use the tool, do some due diligence, and you'll be making pretty nice profits very quickly. I hope this helps. If you have any questions about the tool, please post them in the comments. I'll see you guys around.